It's 12:11. This is the Wintrust Business Lunch. I'm John Williams. Craig Bolanos returns, the co-founder and wealth advisor at VestGen Wealth Partners. Hi, Craig. Welcome back to the show.
Hey, you know what? Good to be here. I got to tell you, those honeydew drinks at the U.S. Open are sounding pretty good on a Friday, also with stock markets rapidly reapproaching all-time highs.
Yeah, cheers. I was paying attention to that recipe Steve mentioned, and I thought, that sounds fun, funny, kind of delicious. I thought that, and Steve also mentioned this earlier, and it wasn't about a cocktail. I thought that maybe a quarter point had already been baked in, as they say, into the markets. Evidently not, huh?
Well, the quarter point for September was widely baked in, but what we got today was a literal teaser. It's a full reversal. We're not just talking about September rate cuts now, John. We're talking about the follow-on act for sure by December, and I think continuing into 2026 and injecting some lower rates, helping the banks, steepening the yield curve, reducing the cost to borrow. It's a good story, and the Fed officially pivoted today, even if that wasn't the direct lines in the rhetoric.
Yeah, I was going to say, did you listen to the same speech we did? It says here, the baseline outlook and shifting balance of risks may warrant adjusting our policy stance. Is that what you're talking about?
That's exactly what I'm talking about. It really is. And I think the Fed, we start combing through the details. They're starting to recognize now that they really need to pay attention to the jobs market. They don't want to get us in a position of stagflation. I think that means the cards they have to play, especially when we're seeing those initial jobless claims tick up just a bit. We're seeing those continuing claims, meaning it's taking longer for people who lose their job to re-seek employment. Means it's not just about inflation. It means we need to worry about the other side of that dual mandate.
I wonder what's changed. I mean, you just mentioned those numbers, but inflation has been inching up too. What has persuaded Powell to finally flip?
I certainly don't think it's the president. I certainly don't think it's the very public rebuttals that they do back and forth. I think it's much more of a concept that they can't be too wrong once again. We have a chance every 5 years to redo the formula that the Fed looks at because economies are never static. Economies are already dynamic. And I think the Fed is making the move that, yes, the year-over-year inflation data is going to tick higher. We're going to start seeing some of that come through. That's a byproduct of tariffs, but hopefully it's going to be a one-time hit, and between the producers, the consumers, and ultimately the importers and the retailers will split those 18% baseline inflation rates 6, 6, and 6, and then it's all about the jobs because we need to keep the jobs moving because that's what allows the consumer to continue to spend.
I haven't seen the president crowing about this, but does this mean Donald Trump was right?
I don't think he should take a victory lap. I think Donald Trump does whatever Donald Trump needs to do to go ahead and accentuate the policies that he needs. I think the market was right because the market has long anticipated that we would get rate cuts in September. I do acknowledge when I look through the last report, the two people who were looking for rate cuts were a bit on an island. Maybe that means they're applying for the next Federal Reserve job. But here's the bottom line. The market is the only thing that matters. If it's right and the market says this is the correct move to make.
How much is this about the tax bill?
The One Big Beautiful Bill Act had a lot of incredibly important provisions. The most important provisions, of course, were the renewal of the Tax Cut and Jobs Act. Because if you didn't renew the Tax Cut and Jobs Act, we'd be having an entirely different market and an entirely different economy. But if you ask me if OBA, the One Big Beautiful Bill Act, has injected some form of massive stimulus, no, it hasn't. But I do anticipate, John, the abatement on overtime, the abatement on tip income, while those things are law, they are going to show up this fall just in time for the holiday season. And I think that's going to help combat the high price of toys and other goods that people are going to be paying at Walmart after seeing their earnings report the other day.
Yeah, there's one thing we haven't talked about, though, that we should relative to that. Where.com. Craig Bolanos is talking to us a little bit about the markets, which are up 1.8, almost 2% in some instances. All the indices are up. The Dow has eclipsed its record high. And Craig, when we started this conversation, you said that while the markets had anticipated this, maybe not the additional optimism that you were able to read into Chairman Powell's statements. So up they go, almost 1,000 points. I think we touched 1,000 at one point today. Do you have a guess then, Craig, on the rest of the year? Will it be 75 basis points or 50?
Well, I think we're certainly going to get that first cut right away in September. Again, I'm going to say we're going to get the second cut in December, so that's 50 basis points is coming in, September 17th and December 10th. I don't know that the Fed needs to be more aggressive than that, given the dual threat that still exists of rising prices with a slowing labor force. But I think we get those two cuts, regroup, see how the holiday spending turns out for the consumer, and then re-begin those cuts moving into Q1 of 26.
And what do you make of the fact that tariffs still have not come home, that the full freight of tariffs, some of which are yet to be negotiated? And this was Chairman Powell's hesitancy. This is why he's been slow. We just don't know the impact of those tariffs. What do you make of that?
We won't know until we get there. I've defended on your show before that I think it was smart not to lower rates when people first wanted them. I think you had to wait some of this out. And I think we are going to be very data dependent. I really do think the prices are going to temporarily escalate. And I think all of those are going to start arriving in September and certainly by October. And I think it's clear that the general public believes the same because we saw back to school shopping start before the 4th of July this year, John. That normally doesn't happen. People aren't buying Crayolas and scissors and crayons and folders and Trapper Keepers. Wait, they don't do Trapper Keepers anymore. That was from the 80s. But people obviously pulled forward those decisions because they were worried about the tariffs, and rightly so.
Okay, but you're telling me then that we've front-loaded our buying and companies front-loaded their purchasing, but in fact maybe we will have a hit when the tariffs are in place and people need things that they haven't already bought, right?
Well, I think that I don't want to call it a hit, John. I think it's a very unique discussion because the consumer is so bifurcated. That high-end consumer, high-end earner is continuing to spend like crazy. The low end of the consumer has been, is, and will continue to just get by. For Wall Street, the view is earnings per share. It doesn't matter where the sales come from. Yeah. The long-term sustainability of this, though, the real discussion that needs to be had is how this economy and the retail spending is happening from the high-end consumer in the absence of everybody else.
That's interesting. So the big bill that you talked about, which cuts Medicare, for instance, but favors businesses and the wealthy, you are agnostic about that in your conversation with me here. You're just saying that's what's going to happen.
Well, what I'm saying here is this, depending on how you look through OBA, the One Big Beautiful Bill Act, there's a lot of people that are excited about the SALT cap. And by the way, the wealthiest people won't benefit because their income will phase it out. There's a lot of retirees who are thrilled that they're getting a $6,000 bonus deduction per person. But again, that's capped based on income. There's a number of things in the bill for virtually everybody, but what I continue to say is the purpose of the One Big Beautiful Bill was to renew that Tax Cut and Jobs Act, get certain parts of it permanent. Other parts are going to have to roll off and expire because it didn't budget score well. And I think I'll let C-SPAN do the debate on what's good, bad, or indifferent. I'm just looking at the results, and right now the results are it's helping the trend, and I think that cut or reduction of non-taxation of tip and overtime income is arriving just in time this fall at the same point in time the prices start to escalate for the consumer.
The rising markets today, is it across the board? Is it tech? What's lifting the markets to these super highs?
Well, the first thing that's lifting the market is the rally in small caps. That's a story that no one talks about. The Russell 2000, the S&P 600, has been completely left in the dust the entire year, and it's making up ground today on some renewed enthusiasm of rate cuts and the steepening yield curve. I think in addition to that, yes, you're going to continue to see this rotation where investors need and know they need to stay into technology, but I think you're seeing a broadening of the market here because a lot of people are talking and and rightfully so, that the 10 largest companies make up almost 40% of the S&P 500. The top 5 companies now account for 25% of the stock market's entire value. So I think that screams, hey, we should stay invested, but start to broaden out our holdings a bit.
Anything else you want to make sure I ask you about today, Craig?
Yeah, you should ask me if the Chicago Bears are real this year. And after putting up 38 points on New England, or not New England rather, but 38 points the other day in the preseason game against Buffalo, I got to think it's a good sign. Preseason or not, it was encouraging.
Okay, so here's some financial advice we don't normally ask you for. The over-under is 8.5. They're playing 17 games. If they win 9, I make money if I take the over. Would you take the over?
I'm taking 10 games. That's bold. They're going to win 10 games this year, John. That's 10 games. Our division is tough. The conference is tough. But I think the Bears are on their way back to some excitement. And while I was worried about these off-season picks, I'm thinking it's looking good.
We're in perilous territory here on the Wintrust Business Lunch. I hesitate to ask people for, what are you better at, stocks or football games?
I am significantly better at helping people get retired and stay retired, John. That's what we're good at here at VestGen Wealth Partners.
That's Craig Bolanos. Okay, Craig, thank you for your help today.
My pleasure.
News from the